Third-party order process. This is a business process within SD which has got integration with FI, as well. So the process goes like this. Products and services which are delivered to customer from vendor directly, and example being the trading goods, which means the goods which are delivered to you normally, or you are asked to deliver to the customer directly. So in this case, what happens is that customer orders a product and company creates a sales order on the customer. Then since company doesn't have this product, in turn it creates a purchase order on vendor. This happens directly from SAP, the sales order. And once the sales order is converted into the purchase order, and the vendor receives this information and he directly delivers to the customer. After delivering to the customer, then he informs the company that he delivered. Based on the information, so the process looks like this. There is a customer, the company which implemented SAP obviously, and there is the initial stage like there is a purchase order comes from the customer, and that purchase order, based on that purchase order, you will create a sales order, and the sales order is generated from our SAP system and sent to customer. Once that is there, and now it's time to deliver the goods. Since you don't have that goods, you will generate a purchase order on your customer vendor. So the purchase order is normally triggered from the sales order itself based on the SAP configuration. So the purchase order information is passed on to the vendor, and vendor delivers goods to customer as per his convenience. So this delivery is outside from SAP system, which is delivery by our vendor directly to the customer. So our vendor in this case is a third party. And then once he delivers the goods to the customer, he informs us, and it's a time to bill the customer. We will bill the customer, so which is AR invoice, which is accounts receivables, and after that we deliver goods directly. So we need to record that information into SAP system, because the goods which have gone from vendor, we would be responsible for paying it. So for that information, we have to make a virtual goods receipt to post to goods GR and IR. At the same time, cost of goods sold will be posted here as a consumption. And then as a step 7, which is AP invoice, accounts payable invoice will be created here. So in total, step 5, step 6, and step 7 are having accounting integration with accounting entries, and its FI integration will. So overall process wise, it is FI, SD, and MM integration. So three steps, the accounting entries looks like this: billing to customer, debit customer AR, and credit revenue. Step 6, which is goods receipt virtual. So there is no update of inventory, and it's a debit cost of goods sold, which is consumption here in this case, and credit GRIL clearing. So again, this is two steps are happening here. There is no update of inventory. It's a consumption is happening, consumption to the cost of goods sold directly. The third and last step is that AP invoice, which is accounts payable. You post to GRIL clearing and accounts payable vendor account. So this is the overall process that is there for your entire FIMM integration. Hopefully you enjoyed this. In order to see the demo in SAP,